Good evening, everyone. My name is Jesse McCormick. I'm the program director here at the center. Thank you all for being here, as well as those folks watching online. I'll turn things over to Professor Pino and our speaker in a moment. But again, I just want to say we've got a great lineup of events. This is one of many. You can register for them all on our website. The next one is next Monday on October 7th. We've got the Energy Minister of Mozambique, and we hope to see you all again then. So let me turn things over to Professor Pino.
Thank you. Thank you very much for coming. Thank you very much. It's the third time I've tried to have you here, but at the third we did. There was the first one at Yale. Now, last year at Columbia there was a storm. For the third time we have Guillaume Aubert. He's a leading expert on energy in one of the stars in consultancy, about the Boston Consulting Group. He's going to speak about energy policy in the U.S. if by chance energy policy exists in the U.S. And I think that this will be very challenging, not only for your expertise, but because I understand that you plan to have more of a dialogue with the audience. So thank you very much for accepting to be with us.
Thank you, Manuel. So actually, we met a couple of years ago at other US university. We were part of the same panel with Manuel, and the panel was on energy policy globally. And others actually picked, China, Europe, and I was the last one to actually join the panel, so they gave me the US. And I think the reason why they gave me the US, it's probably one of the most complex topics, is when you talk about US energy policy. I would say if you think about Europe, Europe has treaties, they've got plan, everything is defined, it's kind of clear. If you think about China, I think we were just talking about it with Manuel, you've got national plan, you've got national players. It's complex, but you can read what's going to happen. Unfortunately, in the US, I think we don't have, such clarity. And so I'm not going to give my point of view because I know that if I give any point of view, I'm going to be wrong. But as a good consultant, I would say, when you don't know the answer, you try to ask questions. So I'm going to ask questions to the audience and try to be as interactive as we can be and see, whether we can have a good discussion about US energy policy tonight. So this page is probably not very different from any page you would do on energy policy for any country. Just, a good summary of, if you think about energy policy, if you're a player or if you're a politician, what would be on your agenda? I think what's interesting when you think about the US is everything is actually relevant. And on all those dimensions, you actually have real choices. And I think that's probably like a unique situation. So let's look at, a few of the items on those page. Technologies. So what are the available technologies? What can I do? What is feasible? If you think about the US, it's a very, very diversified, energy mix. I can try to push on nuclear, on solar, on wind, on biofuel. Everything is here at my disposal. I can master all of those technologies. Availability of resources. Just compare US with any single European country. And you've got wind, you've got sun, you've got oil, you've got gas, you've got, huge land, availability of biomass. I mean, just compare the situation of the US with, again, the UK. I mean, if I were to do energy policy for the UK and I want to do renewable, I know I need to do offshore wind. It's not because I like offshore wind, it's the only thing which is available to me. Competitive dynamic. Think about the situation in the US. Again, in most countries, if you think about the players in the power and gas industry, you will have an handful. And I say an handful, sometimes it's one or two. You just need to, deal with those ones, and then your energy policy is done, or you're almost sure it's going to be implemented. Think about the utility landscape in the US, 3,000 companies. 3,000 companies to serve 144 million customers. You say, yeah, but there are a couple of big ones. So take the top 10. The top 10 serve, maybe 1/3 of the 144 million customers. So even if you agree, or even if you talk to those top 10, you only capture 1/3 of the potential customers in the US. So think about the complexity of thinking, how do I play with that competitive dynamics in my market? Then if you go from left to right, I mean, there is nothing that should surprise you as a student here about what are you trying to achieve. Are you playing with the environmental target? Are you trying to think about the security of supply? I would say in the US, yes. At least this administration has an agenda on both. So it's not either or, it's and. Think about cost to ratepayers. I think today is probably the best day to talk about cost to ratepayers. We see what's happening tomorrow, but yes, of course. Overall competitiveness. I mean, overall competitiveness, a big priority for this administration, and I think for any administration in the US. Also, this idea that manufacturing can come back in the US and energy can be part of that equation. And then the green jobs. I would say the green or not, that can be created through a different energy policy. So if I just, look at that menu of things, and again, that page would be the same for any country. If I look at that page, I just have the feeling that I think about the US, all those points are relevant. And actually, all those points are much more complex to address in this country compared to any other country. So I thought that I would start by having at least a quick status of what is the starting point. And I don't know how much of you know well the energy sector in the US, so I've just put a short quiz. It actually disappeared in that version, so I'm sorry about that. I will do it at the end. So let's go now to the starting point. The starting point about emission. As you know, US is number 2 countries in terms of emission. And if you look at that graph, which look at the last 20 years, there are 2 things that for me strike as being important. The first one is the share of transportation and electricity generation. If you look, any energy policy wants to do something with CO2, we'll have to deal with electricity generation and transportation. Those are the 2 things that really matters. The second point, if you only talk about energy independence, which is the second dimension on that page, the first one, we are talking about a situation which is totally different from probably 5 years ago. We're talking about a country which is at the verge of being potentially energy sufficient, where the gap was increasing until 2005 before the unconventional gas boom, and where suddenly, over the last 7 years, we're getting closer and closer to energy sufficiency. And I think that's actually 2 very important starting points when you think about what the policy could be for tomorrow. On one hand, any CO2 agenda will have to do with transportation and obviously power generation. On the other hand, this idea that energy sufficiency is probably at the corner. So what's next? If you simplify the debate between CO2 intensity and energy independence, and you look at the other variables as being like, things that you would assess, if you position, the US in today's world, which is, I would say relatively good energy independence and let's put it medium to high energy intensity, what's feasible from now until 2020, 2030, and 2050, because we want to look at tomorrow and beyond. Obviously, there is so much you can go from current situation, in 20 or 30 years. The question for me are really around, what are the key decisions you need to make? I'm not going to go through all of them tonight. It's going to be too long, but probably more matter of discussion. I'm going to talk about 3 things. First, I would say the constraints of any energy policy. Second one, I have a quick discussion on natural gas, and the third one on renewable. The constraints. I think probably the US is one of the very few developed countries or developed economies where if you look at the list of blackouts every single year, you almost surely find an event in the US. I mean, US has an energy and a power system which is aging, where the margin in terms of generation is tight, and where the players are actually fighting to actually upgrade their networks and their infrastructure. What does it mean? It means that any policy which can put at risk the economics of the players are indirectly putting at risk the overall power system. And I think that if you look at the various utilities, I mean, who is currently investing in the US? If you look at the current situation where they find themselves in a situation where at the same time they have to run with, policy uncertainties, new customer behaviors, need to invest, in new regulation to comply with regulatory requirement for nuclear, cyber security. They have at the same time to invest in their aging infrastructure, distribution, transmission, new power generation. I would say everything, and at the same time in a situation where their demand is going down, and where they're facing what we call a rate earning squeeze. What does it mean? It just means that those companies actually cannot increase their rates in absolute numbers because obviously of policy pressure. They cannot really increase significantly the revenues because demand is not growing anymore. And they are facing an incredible amount of must-do investment that is actually taking most of the free cash flow. We recently did an analysis looking at the top 10 utilities. Most of them are actually expected to be free cash flow negative. So if I'm a policymaker, the question number one is actually, whatever I do, how can I make sure that we're going to keep the light on? And I think there is a very difficult balance to find in terms of energy policy and power policy, in terms of how fast you can move in forcing utilities to go in one direction or another. If you consider, I would say, the limited amount of money and cash that they have at their disposal at the moment. But, that's one dimension. The second dimension I wanted to cover briefly, because I think it's in everybody's mind, is renewable. This page is about solar, but I want to talk about renewable more broadly. As I guess most of you know, the main driver of renewable growth in the US has been the renewable portfolio standard. So if you look at the current situation, there are probably still like between 40 and 60 gigawatts of renewable energy or renewable capacity that needs to be built between now and 2020, as well as a federal policy through ITC and PTC. Now, if you look energy by energy or technology by technology, if you start with wind, you might know that actually in the first quarter and second quarter of 2013, let me ask that question, by the way. Who knows how many gigawatt has been installed of wind in the US over the first 6 months of the year in 13? What megawatt? 30 megawatts. Okay, any other guess? Zero. That's the answer, 0. So 2013 is probably one of the first year, or at least the first 6 months. I mean, it's not 0, it's a couple of megawatt. So 13 is actually maybe one of the first years over the last 10, maybe more, where there's been absolutely no wind installed for 6 months in a row. Couple of megawatts. And the reason being economics. The current situation with a low gas price makes wind actually uneconomical right now in the US, unless gas prices goes up, or alternatively there is a significant technical breakthrough and the cost of turbine actually goes down. So if you think about renewable, if you think about wind, unless something happens, wind is actually a very expensive option for the US at the moment. So if you look at wind, then you go to solar, and I think that's why I selected that page. It's probably one of the most interesting topics right now. Solar obviously is subsidized, through RPS and through ITC and PTC, the same way as wind. Nonetheless, there is I would say a situation where solar PV is going to be in the money at socket parity in the US within a reasonable time frame. And I think that's actually a major breakthrough. I think the share of the of FERC actually made a comment in August saying that solar is potentially going to take everything. So I'm not going to get there. But if you look at the economics of solar in the US, and I'm sorry it's a very complex graph, if you look at it state by state, if you look at the level of irradiation and the retail price in each of the states in the US country, and then you look at the economics of the technology, which are those ISO lines, and whenever somehow your bubble corresponding to your state is above the ISO line, that it just means that solar is in the money from a retail perspective. So obviously, if you take the first line, which is a good proxy of today's situation with a $4.5 per watt peak install, there are probably only one state which can potentially be in the money. Now, as technology is actually maturing and the cost is actually going down, and we believe that cost will go down and can go down significantly in the US, you see that the number of bubbles is actually increasing. And by 2017, even if you assume a 10% ITC, which is a reasonable assumption, you see that probably half of those states could actually be at socket parity. So if I think about, again, coming back to what's next in the US, energy policy, solar is probably a topic where, I would be looking at very seriously. The next topic is natural gas. Natural gas, I think there are two things. Everybody knows that there is plenty of it. So the availability of resources is not the question. I think there were recent studies saying that even at $4 per MMBTU, there is probably already like 40 years of production available. And if you were to go to $6 per MMBTU, you would probably go to 60 years. So the question is not about the availability. The question, I would say, is not even about the economics of natural gas for power generation. You can run the number one way or another. It is a cheaper source of power if you have to build a new capacity. The question is, where does it lead you? So assuming that you're, again, a political leader and you think about gas, obviously, there's a lot of benefit toward gas. But this is a result of a simulation we did about a gas scenario for the US and looking at the impact on CO2. I'm not telling that CO2 should be your main goal for energy policy. I'm just saying it's one among the other ones. But maybe what people don't take into account is gas can bring you so much towards reducing your emissions. And in 2009 there was an announcement, and again I was listening to it more as an outsider, that US had a goal to reduce emission to 17% of the 2005 level emission by 2050. If you believe on natural gas and that's the way to go, actually you never go there. You reduce significantly from today's level, but you never go to 17%, no way. Unless you put sequestration on, CCGTs, which is a technology which is not well mastered and probably very expensive. You can see emission could reduce significantly by a factor of 2, but you cannot go to 20% of 2005 level. So I think, going through those elements, the question is then, what's your view? And as I said, I'm not going to give my point of view. I'm just going to lay out some scenarios and probably have the audience react to them. If we are here today, I think I see 4 scenarios for the, let's say, mid to long term. One is this one, which is, regulation doesn't work, and we go to I call brownout. It's investment is not done, economic signal is not clear, and therefore we have more and more blackouts in issue, especially with the power system. Hopefully we will avoid that one. Second one, muddle through. This is kind of the same thing, but somehow to a certain extent, you react, early enough. You correct issues that are well known on the capacity, for example, capacity market on the East Coast, and you're able to go through that phase, but without any big changes. I think there is a big scenario here. It's probably everybody has in mind, which is what we call gas and RPS. So you go, you meet your RPS standard, you build your 40 to 60 gigawatt of renewable energy that is required, and then you just push on gas, because this is where jobs are, this is where you can get energy independence, and this is how you can get probably an abatement of 20-25% of your emission on power. And then there is the last one, which is renewable breakthrough. If you really want to go towards low emission, probably you need to cut on gas and push renewable, with all the costs and implications that this might have. I will come back to that because there are some interesting simulations that can be done on how much money we are talking about. Now let's look at the next phase. So let's say this kind of the four scenarios for tomorrow, or let's say for 2025. The next question is, where can you go in the US if you think about 2050? And is a goal of 83% reduction, which was set in 2009, actually realistic? So we've done some very in-depth analysis, and we believe that from a technology point of view, it's actually feasible. That you have a very, very aggressive energy policy, which I'm not saying that you should have, or even that the US is able to have, because it has to be consistent in time and consistent across states. But it's actually a technologically achievable goal. It just requires tons of things. Electrification of transportation, decarbonization of power through wind, solar, nuclear, usage of and incentive to use plugging in grid, energy efficiency where there is no alternative, as well as use of biofuel. So that's one scenario. The question actually, if you think about long term, is not so much about technology. I think people tend to focus too much on technology. I think technology is there if you really want to go there. The point is about costs. If that's your goal, the cost for you is probably in the order of magnitude of $1 trillion. So somebody told me last time, that's not that high. I must say that for me, that's high. But and that's about $1 trillion to actually totally change your energy mix. So that's also an interesting thing when you say, you look at the debate between, different choices. There is something there where you actually, as a country, you have to put $1 trillion on the table between now and 2025 to actually get to a better place. And that's probably the only way to get there. Then you wonder whether it's the right way, by the way, and it is the right choice for your economy. The other thing I would like to add on that thing is anytime actually the price of natural gas is going down, you can add a couple of $100 billion to that bill. I think this study was done a couple of years ago, and probably the cost is now closer to $1.5 trillion. Another point as well is who is going to finance for that, which I think we touched upon very briefly at the beginning. Whenever you define energy policy, you need to think about who is going to implement it and how the competitive dynamic is going to play. And obviously, if you want to have it financed by the private sector, then the cost is actually increasing significantly because of the cost of capital. So how to think about energy policies? And that's a very complex slide, but I like it because it's linked to some of the work that actually Emmanuel did a long time ago when he was in charge of defining the energy policy for European Union back in, 2007, exactly. And when Europe came with the 2020 plan, how do you think about your energy policy? So if you're rational, this is how it could look like. You look at your criteria, you look at all your dimensions, you look at your scenarios, and you try to figure out which one is the best. That's an example for European Union. Obviously, the question is, what the answer might be for the US. But I think for me, the big deal here is not whether there is an answer, is how to get to the answer. And coming from Europe, as you can tell by my accent, I work in Europe in 3 different countries. I'm always amazed when I talk about energy in the US by the number of stakeholders that you need to align to take a decision. People, especially foreigners, and I guess you have non-US citizens in that room, tends to underestimate the complexity of the US energy market. Where utility, you have to deal with your PUC or PSC. You have to deal with some legislation which are taken by your local politicians. Then you have to deal with FERC. You have to deal with DOE to EPA, and then you have to deal with federal regulation. I think the key challenge for me when I think about US policy is not about the right choice, it's about how this is going to play between the various stakeholders. And if I were to actually try to answer the question, what is going to be next in the US, I would probably spend as much time on understanding the fundamental of the energy policy, which is probably, what Europe did in some time ago, but as well when they renewed the renewable plan as part of the Kyoto Protocol. But I think I will spend a significant amount of my time in, looking at game theory and trying to understand, what is a natural equilibrium between all those players. And that's probably, to my point of view, is that's actually a big difference between Europe and any other country when it comes to energy policy. So I'm just going to close, that short introduction and probably open the floor for Q&A. But if I look at what's beyond, beyond the 4 scenarios, I think I can see a couple of things. I can see clearly that we are moving back here after 2020, 2025. I can see a gas RPS scenario moving to a broader usage of gas and renewable by 2050, which will bring us probably to clearly not to 17% of 17% emission compared to 2005, probably more in the 50 or 60% at best, but with a a very high level of independence. And I can maybe think about a scenario here, which the 80-80 scenario, which is 80% reduction in emission and 80% reduction in oil imports, where if you think about the stakeholder engagement and the number of stakeholders you need to align, personally I would put I would say a small probability on it, even though I recognize that this is on the page and that should be there. Now, if I step back and I think about U.S. energy policy, I would say 4 things. The first one is, I think this country has a lot of opportunities, which make it more complex, and I think that's very unique, and it's a big chance, but it's creating a lot of uncertainty. And again, I'm always comparing UK and US. Just think about it. How many more choices you have if you're a US citizen compared to a UK when it comes to energy policy? The second one is, I think you should not consider technology to be a limitation, especially in the long term. It might take time, but again, even very aggressive target seems to be technologically achievable. It's really a matter of political will and I would say economic trade-off. The third thing is, I think the main issues, if you want to understand, energy policy here, is not so much about the technology of economics. It's actually much more about stakeholder alignment, and that's probably what is driving really the energy policy, if any. And I think that net, if you were to ask me to bet on any of those scenarios, that just make it very difficult to see how we can actually go to any extreme scenario. And my personal point of view, which is not the necessary point of view of my company, but from my experience, is that unless anything changes, I think we are going to see like a very continuistic evolution of the market. And I don't see how within the coming 10 years there could be a major disruption in the energy policy in the US, given the current situation. So after that introduction, I think I'm happy to take any questions. Do you want to move here, Manuel, or? Thank you.
Thank you very much.
You're welcome.
It was very challenging. When you mentioned, when we met in 2007, and I was in charge of drafting an important document of European policy, and I remember that in December 2007, I was in Beijing, drafting the introduction to the document that we jointly produced. And I had met the top person of energy in China. At the dinner, I asked him, how are you planning to respond to the energy challenge? And yet, but there's no energy challenge because China has all the coal in the world. So I don't know what you're talking about. 1 month later, I met the American Secretary for Energy. My country was the president of the European Union. We have a kind of rotating system. Okay. And it was our turn. And I asked the Secretary of Energy, would you be willing to agree on something common about CO2 emissions? And he told me, CO2 emissions? This word does not exist in my vocabulary. This was in 2007. So the two largest energy consumers in the world. For one, there was no energy challenge because its country had all the coal in the world. For the other, CO2 emissions did not exist in the vocabulary. I remember that in 2007, there were more awareness about CO2 emissions than it is today. I don't know if it's right to say. Worldwide, it was more. We were just around the Nobel Prize of IPCC. Then we had oil at 140, and that was a big issue. People were very much afraid what is going on with oil. Now, 6 years later, eventually awareness with CO2 emissions is not as high, and we see that oil is at around 100, but there's the prospect for oil and gas are better than they were. So there is less pressure to move, and I can only but subscribe your view that how the situation will evolve in the U.S. probably will not be dictated by economic reasons. The U.S. is a country that has decided to have more than twice energy consumption per capita than any other country in the world, and has decided that electricity prices should be less than half of any industrial country in the world. And the U.S. can afford this, to consume twice energy and have prices less than 50%. So the economic constraint is not here, and in my view. And so how this situation will evolve is probably not dictated by economic reasons. I cannot but subscribe with your view. Can I take some questions, please?
Yep.
Okay. My name's Marchop. You did not mention externalities of costs if we don't address certain environmental problems, and as you just mentioned, the tremendous use of energy that we have in the United States, what we expect we can use. Have you done any calculations on environmental damage and the externalities of pursuing the fossil fuel route, which includes gas, natural gas. And also there's a question about there is a lot of gas, but there's a question of whether it really is 100 years of gas, unless you have such extreme externalities. I'm not sure about our future. So could you address the externality costs?
So to your question, I think I've not computed externalities. It's probably as part of my day-to-day job is not something I'm doing, but I think it's a good question because I'm not saying it's good or bad to go to a low CO2 or a high CO2 environment. What is clear is that going to a very low CO2 has a tremendous cost, and the question is, how do you compare it with other consideration like externalities? And it's very funny because I made that presentation, or we had that discussion at another university, and immediately when I said 1 trillion, somebody in the audience said, only? As if, for the audience, at least for a couple of people, this number sounded very, very small, maybe compared to your externality. But I think that's the question that politicians need to answer. Is it worth $1 trillion? Yes, no. And if I have $1 trillion, where do I spend it? Do I spend it here, or do I spend it on other issues? But I think, the question is, we are not talking about billions of dollars, so it's a big amount, so it's big choices. So if you want to be very serious, and if you want to achieve your goal, that's a lot of money you need to put on the table. So the externalities needs to be worth it.
All the externality costs.
And to your point also, I think the question you were raising is natural gas. I think natural gas is actually addressing a lot of the issue. It depends where you put the bar. If you think that you're happy with, a significant reduction of CO2 up to, let's say, half of what the level it used to be in 2005, if that's your goal, then you're good with it. If for some reason you believe that you should go further than that, then probably you need to look at other energy as well in the mix.
Hello, my name is Maggie, and I'm a first-year energy MIA student at CEPA. So you talked about different factors and scenarios that may affect your outlook on U.S. energy market, and I would like to mention a few. U.S. has abundant resources, a relatively open political atmosphere, and easy access to global energy market relatively compared with the United Kingdom. And in the past, during industrialization, it helped U.S. to catch up with UK relatively quickly in terms of reach the high energy intensity level. But will these factors, in your opinion, still be considered as positive factors or negative factors in terms of the future? Because I think with those advantages that used to be considered as advantages in the past, those factors will actually affect U.S. to have less consideration about sustainability because it's relatively easier for U.S. to have more energy at a lower cost. In your opinion, what do you think? Thank you.
So I think there are a couple of interesting things in your question. The first one is when you talk about energy policy, obviously there is a big implication or large implication with jobs, and I was involved in some discussion a couple of years ago as well, and people tend to consider job like a job is a job, but actually it's not totally true. You need to look at what type of job, and whether a certain energy policy is more to create manufacturing job or not actually has a very different impact about where those jobs are created, how many jobs you can create, and how sticky those jobs might be, or resilient they might be, etc. And when thinking about energy policy, there are obviously some energy policies which are, I would say, improving, the situation of the U.S. as a manufacturing location. And I think today, U.S. is considered to be probably more competitive than yesterday for a number of reasons. Increasing cost of manufacturing in other countries and decreasing cost of energy, and this is part of the overall competitiveness of the country. So I would say, there is one way where you still, try to go, the way that worked in the past, which is, cheap energy and manufacturing, and you create jobs like that. And I think, that's an interesting way. I won't dismiss it.
This is Raif Asiri, School of Electrical Engineering. My question is, how does the possibility of the increase in U.S. production of unconventional oil blend into the mix of future energy sources? Because many estimates indicate that U.S. will substantially increase its oil production in the next decade. So I'm just wondering whether we should consider this as one of the major energy sources of the future, either in the long or short term. Thanks.
So I don't have a specific opinion on conventional oil. What I found, nonetheless, what I found very interesting when you look at the evolution of the energy balance in the U.S., and if you look that the U.S. moved from importing 30% of its energy to importing, say 16 or 17% of its energy, and if you look at what has changed over the last 7 years, obviously natural gas played a big role. If you look at the balance for oil, there was a slight decrease, probably because the economy went down. But one of the major change was actually oil products, and some of them are actually byproduct from unconventional gas. As you know, there are a lot of ethane and a number of products which are produced at the same time as you produce natural gas, and actually you can show it, you can see it in the balance. So to your point, I think yes, the impact of unconventionals is going to be beyond natural gas per se, and would include and is already including petroleum product. And I think what's happening in the US is actually changing completely the pricing dynamic, for example, of some petroleum product worldwide. And US is probably going to be one of the major exporters of some product, including LPG product, to Europe and other countries. So your question, yes. No, on unconventional oil per se, I don't know.
Thank you for taking the time to speak with us. Peter Rose from the Quebec government in New York. Just this is out of curiosity because I understand the various levels of trying to analyze the U.S. energy market. And my personal view is that, it's a reflection of the gridlock in Washington, so it's become very regionalized in nature. But my question was more based on the technology, and you set out a host of technologies that could respond to the goal. Given your country of origin, France, and nuclear power, and my understanding that there is a lot of it in France, what future do you see for nuclear power in the U.S. mix, if any?
I would almost say, given where you're from, I'm sure you're also very interested in nuclear power. I think nuclear power, somebody is going to talk about externalities, so let's put that apart and just look at, the characteristic of the technology. I think it's a technology which is producing a low carbon electricity, base load, at a reasonable cost. That's the facts. The issue here is when you say reasonable cost, is that cost is what it is, and when energy cost from alternative energy is under that cost, it's not competitive anymore. And I think the U.S. unfortunately find itself in a situation where, like in Europe, like probably Germany, like 15 years ago, where the rising cost of running a nuclear power plant because of, I would say, additional safety requirement, and probably because the industry did not necessarily react, in the most cost-effective way to those additional regulation. So on one hand, costs going up. On the other hand, revenues going down. I think you have a number of nuclear power plants currently in the U.S. which are under the water or close to be underwater from a cash cost perspective. And you know that over the last 12 months, I think already 5 units closed. VY was announced a couple of weeks ago. Crystal River 3, Songs 2 and 3, Kiwani. So for a mix of technical reason and economic reason. So I would say, you've got 2 options here. Either you let the market rule, and I would say that part of the nuclear generation capacity, especially smaller units, are going to close over the coming years, and probably nuclear will stay a significant part of the mix, but not more than that. And I think that's probably, I would say, a base case scenario, unless you do something. And to do something is either you recognize that there is externalities on CO2, and therefore you put a price on CO2, or you recognize that to a certain extent you can consider them as another renewable power, and then you create some sort of specific incentive. Otherwise, in the current market situation, I don't see how nuclear can grow significantly in the US. And I think it's not necessarily very specific to the US. I think in Europe as well, people are kind of struggling to make the economics work at the moment.
One of the questions my students have for the next take-home assignment on electricity is to do some research. When was the last nuclear power plant in the US?
The last one.
The last one.
To be built or to be closed?
No, to be built.
To be built.
But
there are a couple of...
that's one of the questions that you have for the next one.
Okay, but there are a couple of nuclear power plants in construction at the moment. Again, I mean, I think your point is very good. You can see the US as being one country or being 50 plus states, and I think none of the above or none of the 2 vision is actually the right one. I think the fact that states are taking a more active role in policy, it's clearly a trend, and which is impacting energy players. In New York is a good example. California is another one.
Hi, my name is Adam Halbert. I work with I did work with a private equity firm in Canada. We invest in some energy in companies. Anyway, my question is regarding coal. There are clean coal technologies which would work with which would work as cutting down on emissions, but the United States has a massive coal reserve and infrastructure built to sustain it. What's the future that you see?
So I think when you got, it depends what you talk about when you talk about clean coal. Is it clean coal from a SOx, NOx, or is it also clean from a CO2 perspective? Clearly you can do clean coal from a SOx and NOx perspective is an interesting technology. I think if you look at the economics based on the current coal price and current gas price, probably you would probably going to build a gas plant rather than a coal plant, with some exception based on local specificities. I think coal as well. If you want to invest in coal, and if you're rational, and if you look at what happened over the last 10 years, I think there is a reasonable risk that a new regulation at some point will be on you, and you will have to again put an additional $200 and $250 million. So I think the regulatory environment around coal have created some uncertainty, which makes it a bit difficult as an investor to actually commit to new coal at the moment. If you think about clean coal for CO2, I think there was a lot of hope, but again, given that coal is, I would say, at the money at best with CCGTs or even single cycle. How much money can you actually spend on top of that for a CCS system? unless there is any specific incentive, there is no way you can make it work. And I think probably when you look at the earliest estimate, even in Europe, where there have been a number of studies suggesting that with a $20 or 20 euros per ton, you could actually make CCS work. I think probably those estimates now are much higher. And if you convert it into dollars, and given the power prices, question is it really something that you want to offer? Then if you want to spend that money, coming back to that $1 trillion, that actually is the best place to spend that money. And I think they are probably, especially in the short term, better alternative in terms of the providing, low carbon power.
Hello, my name's Mark Cox. I'm a renewable energy consultant with NEF Advisors. It's a bit of an irony that right now, somewhere else in the campus, Jeremy Grantham of GMO in Boston is talking about unburnable carbon. And this is something you just mentioned as one of the issues that had to be analyzed by your politician. But it's a huge issue because all of the carbon resources, oil, gas, and coal that are in the ground at the moment, if you take this seriously, only a certain amount can be burned. And yet those assets are fully reflected as values in the stock markets of all of the oil, gas, and coal companies. And then do you have any thoughts about that? What do you think the policy changes? It seems unthinkable that America will take that into account somehow, but do you think they will? Do you think they'll have to? How do you think that will play out? And I just wanted to ask you as well what your technology breakthroughs were, what you were thinking of in the technology breakthroughs for renewable energy, which you had on your chart.
Mm-hmm. So let me answer the second question first. I think when we say renewable breakthrough, actually it was not technological breakthrough. I don't think that there is, I was not thinking about any specific technology breakthrough. I think if I just look at the technology as they are, it's more, the question is more around the policy and whether or not at some point, there is, a federal RPS, for example, or either any additional incentive or PTC and ITC actually maintain +15. I mean, if there is, a political will to actually change the course and increase, the share of renewable versus gas versus, what would happen if you don't do anything, then this is where you would go. And I think what, I was highlighting is, that's probably a good path towards, an 80-80 scenario. It's also a costly one. Because if you want to go to that scenario, incentives are required. I don't believe that within the coming 10 years, I mean, we really know what's going to happen in the coming 10 years in terms of costs. We know which technology is going to be in the money, which technology is not going to be in the money. And I think the whole point, I think, you don't have to bet on any technological breakthrough actually at that stage.
As you look around the world, my name is Ken Kramer, and I have a valuation business that's a service provider to the energy industry.
Yep.
As you look around the world, you see some very different situations in different markets and different cultures. In the U.S., we're blessed with an abundance of riches and an inability to agree on any important policy. Europe seems to be better at figuring out what's good for the social welfare of its people, at least compared to us, and is a little more energy constrained.
We don't know if it's for the good of the people, but at least they agree on something.
Yeah. In the developing world, you've got China, which is ironically both the largest installer of both coal and solar plants simultaneously, and a lot of the rest of the developing world, where I suspect they must be asking the question, do we have the luxury of worrying about carbon when we're trying to get build our a standard of living? So with all the different factors, pulling people and constituencies in different directions. Do you have a sense of where might be the best bang for the buck, because there's only one atmosphere that we all share, in terms of decarbonizing the atmosphere, in terms of if we had to focus on one or two things, you know, is it really an American PTC, for example, as opposed to something you might do in China or India? You know, how would you prioritize if you could?
So actually, I never had that question before. So let me think a little bit about it. You know, if you were to optimize for worldwide, you know, where you put your money in terms of decarbonizing and reducing, I mean, I would probably go for the, you know, the largest emitter and the country where the technology is, you know, can be improved at a very low cost. I mean, that's kind of an obvious answer to me, you know. If you look at, you know, subcritical coal plant, you know, can you get rid of them? I mean, the cost for that local economy might actually be huge, but if you look at it from a global perspective, I mean, replacing that plant is probably the you know, the best way to reduce CO2 from a abatement curve perspective, no doubt about it. When you were, you know, listening to you during your question, I think there is also something interesting when you mentioned the differences between countries in terms of policy, because I think probably what the European approach is bringing to the industry is actually certainty. The risk it is bringing as well is rigidity. You know, someone makes a decision and it's valid for 20 years. So you really need to hope that they actually, you know, they did well the job at that time and make the right decision. But, you know, the context changed. But that approach actually has a big impact, which is decreasing the cost of capital for companies by decreasing the level of uncertainty. So I think it's again a matter of trade-off. And you can see that, you know, in European countries, you know, that certainty created, you know, conditions for significant investment, by also lowering the cost of capital of, I would say, the whole supply chain. And I think that's something that needs to be considered whenever you do an energy policy, because I think certainty doesn't have a huge cost from a political point of view, and has a huge value from an investor point of view. And I think it's really an area where win-win solution can be really found between the, you know, the policymakers and the investors. And I'm not sure that it's something that, you know, I've not seen that's probably not the strongest point, you know, of the energy policy in the US. And I think there is a hidden cost of the energy policy, which is a cost of uncertainty, which is actually building up in the cost of capital.
Hello. My name is Drew Hart. I'm from the Australian Consulate.
I could hear you.
Drew Hart.
Yeah.
I'm from the Australian Consulate General. I was hoping we could return to the question of utilities. Is there any national model that you suggest that the U.S. use? And what do you think the actual model they'll probably follow through is?
I'm sorry, I didn't hear the question.
I'm sorry. Which, in terms of utilities,
Yes.
what is there a national model you think the U.S. should be following? And what do you think the actual likely course for utilities are for the U.S.?
I mean, there is. I mean, I've been working with utilities from all sides, and obviously, you know, there are some synergies and efficiency gain by just increasing the size of utilities. And I'm not saying that you need only to have like 20 million plus customer type of utilities, but probably having 3,000 utilities and to cover 144 million customers is probably not the most, you know, effective way of thinking about the industry. I think recent consolidation have just shown that, you know, yeah, it makes sense, especially when there is a lot of cost pressure. Again, I mean, it's a different topic, but, you know, the same thing is valid. Eventually, it goes to, you know, how do you align stakeholders and make sure you get everybody, you know, agreeing on a transaction so that, you know, the transaction makes sense for the shareholders. no, I hope that actually more and more transaction will happen, because eventually this is what's best for everyone. So just a matter of sharing the benefit of any given transaction between the ratepayers and the shareholders. But there is a lot of leeway for the power industry there in the U.S.
On Friday, the president, or the chairman, I guess, of the Intergovernmental Panel on Climate Change said that basically without a very high carbon tax, there was no real hope of solving the global warming problem, and I was wondering your perspective on that.
I think the $1 trillion is probably another way of looking at it. Given current technologies, I mean, the cost of moving to low carbon is very big, is very large. So I think there is so much you can go by just letting doing small things like ITC, PTC, RPS. It brings you to a place. If you really want to go and be very, very, very ambitious, then there is a cost. So the question is, how do you finance it? I think CO2 tax is one way. I think it's not the only way. So I want I don't want to only focus the debate on should there be a CO2 tax. I think there are different ways of thinking about it. But I think the first question is it the right thing to do for your economy? And I think there are ways to actually put more facts on that debate. And there is a question about timing. What I found striking when we run those numbers is how sensitive they are to not so much a target, but a time frame. So reaching target like that in 40, reaching target like that in 60, especially if you want to do it faster, I mean, the cost is actually almost doubling. So I think there is a question about, what is the time frame for it, and how do you adjust it, and then, the trade-off, is it the right place to actually spend $1 trillion money at the moment?
I have a very short question. What is BCG's, or if you have a different view from BCG, your personal view on the exports of LNG, and what do you think will eventually those exports be so important down the road, or they will be so segmental that they will not play a role? Thank you.
Thanks. So I will give my opinion, not that of BCG. But whenever I got that question, I remember presentation, I think was probably in 2005, when one of the major oil and gas companies they were touring around the world and making that presentation, saying that in probably, I think the time frame was 2020, US will import 250 BCMA of LNG a year. And it was not coming from a consulting company, it was coming from, an oil major, very, very renowned and with a lot of LNG expertise. So just to highlight that, I think, the only thing we know about the gas market is that we are always wrong when we make forecasts. My personal view is that there will be some export in the US, from the US. I mean, the worldwide energy market is actually pretty large. So the question is more, whether or not those exports are going to have a significant impact on the pricing, on the price setting mechanism. And I started my career at BCG in '99. At that time, people were always, already saying that spot-based pricing of LNG will be for tomorrow. Back in '99, I think we are in 2013. I'm not sure we have seen, we were sure that there is 100% spot-based pricing for LNG. So I think things tend to take more time, I would say, in that market. So if you ask my personal opinion, I would say yes, there will be exports. Those exports, yes, will change a little bit the pricing dynamic on the market. Is it going to be a revolution? I would say probably not. But you have to give me the right to be wrong. Because I think everybody has been wrong so far. But yep. A bit more than that, yeah, FTA. I mean, coming back to probably the first page, if you think about energy policy, what matters for you, Is it, local job? Is it protection of energy independence? Is it, local prices? And then you make your choice. I think, the reason why you would limit export are pretty much obvious, and they were on that page. And then you just say, okay, I have a resource. What is the best use of that resource as a country? Different administration might come with different outcomes to it. So I think, the reason why are obvious. The question, it's not a matter of why. The question is, it's a matter of position. And what do you believe is the best choice for your country? But the reason behind it are pretty obvious to me.
Hi. You talked about the, I'm right here. You talked about the stakeholders and how it is a challenge to align them.
Yep.
And it is especially a problem here in the U.S. What are some best practices that can be from other countries in Europe that can be emulated here in the U.S. to make that alignment more efficient?
So I'm not sure there are best practices. There are practices, because best practices would assume that somehow you can replicate them, which I'm not sure you can, because you got a constitution here that it's very different from what we have in Europe. I think what's interesting in Europe is that it's pretty much a top-down approach, where at European level through European Union, there is a set of basic rules which are the same across the board. And I find it a bit ironical that actually if you compare energy markets within Europe, they are much more similar than the energy market between two states in the United States. They're in the same country, but I can tell you I find much more, if you take the Georgian, Georgia and California, or take a PGM market and Florida, they don't have anything to do with one another. They are so different. I will find much more commonalities between Germany and UK, or between the Netherlands and Spain, even though it's a very different economy, even though they are very different natural resources, everything is different, but still they have a common ground and something that creates some consistency across. And I think that consistency across is very important. It creates the visibility we are talking about, that the industries, that the players require to make investment. Now, is it replicable? I don't know. I don't want to talk about in front of somebody from the state of New York, but I think it's a challenge. I think it's very difficult. So I would, I won't make a bet on it, but I think it's a very big difference between Europe and the US.
All right, I think we've got time for about one or two more questions. Anyone else? All right, well, if not, thank you very much to our speaker.
Thank you very much.